Hey everybody, it's Mike from Orderflows, and in this video, I want to cover a question that I get quite often. A lot of people ask me, Mike, what is your favorite order flow setup? And honestly, there are many setups that I look for in the market, but one that's sort of my great white whale, so to speak, that when I see it, it just gets me super excited. That it's just an automatic trade. Problem is, it doesn't appear every day. Sometimes you may go a couple days without seeing it, but it is, when it does appear, it's a very powerful signal. So, today this is the 10-year notes. It's just a simple 5-minute chart, nothing special with the footprint on it. And, we ripped up to the upside, when the CPI print came out, and, we started making this high at 115.11. Then about 30 minutes later, 45 minutes later, we poked up and made a new high here at 11 and a half. Okay, so we just made a new high here at around 8:15 on this 5-minute chart. And then later in the session, let me just expand this up a bit here, we came back and tested that high. Okay, but what was interesting on this retest, first time we hit that high, right, it traded a lot of volume up there. What's that volume? It's like 813. I'm looking at the volume on the offer side. Okay, it actually went and bid over there for about 320. And then the market started drifting lower. I don't want to say sold off, because, even though it did drop from 11 down to 01, that initial bar at 815, that was the entire range. So it was drifting down. And then it came back up to retest that high. And as we're retesting that high, now again, this is at 9 o'clock in the morning Chicago time. When we made that high, that was around 8:15. I mean, earlier we just, this was a new high by one tick after the CPI came out. So, it's in normal trading hours. But the second time we came up to this high, what was getting me all hot and flustered, all excited about, was the volumes when we came back up there, right? This is a double top, but it's a double top, and you traded one contract at the high of the day, right? It's earlier you traded, close to over 1,000 contracts. The second time you get up there, you can only muster one contract. And when I see that one contract, like I said, you don't see this every day, especially if you're looking at, 5-minute chart or 15-minute chart of a footprint. But when you see it, that just screams out to you that buyers are done. And this was a very important lesson that I learned from Tom DeMark many, many years ago, back in the 90s when I was working at Dean Witter. I went to one of his trainings, and he said, when the last buyer bought, the move's over. Just as, on a move down, when the last seller sells, the move is over. And it's never been more clear than when you look at a footprint chart, because you see that just one contract when you retest the high. Where are your buyers? You're not going to go any higher. Even, as you're coming back up, I mean, it's not like this volume is, so pathetic. It's traded 20,000 contracts in this 5-minute bar, which is more than the previous bar, than the previous bar, than the previous bar, than the previous bar. So the volume is healthy. It's not like it's trading, up here at this high on very light volume. It's got solid volume going up there. I mean, you can see the volumes, on the offer below it, it's 1,400. Below that, it's 3,300. Below that is 4,000. So it's strong offers going up there. But what's happened is the buyers have weakened, right? They're just not interested anymore. And then what happens when there's no more interest in buying? Well, then the sellers start coming in, right? And then in the bar afterwards, you see strong negative delta, minus 1,400. Next bar, more negative delta. But the most obvious sign is this one contract that traded there. I mean, it's like the market is screaming to you that there's no more buyers. There's no more people that want to take it higher anymore. And what happens? That's your high, right? It's the double top. It's a retest of that double top. Less volume the second time. And then you see the market start selling off from, you're not going to get short initially on this bar. You got to wait till it closes, right? Make sure, we're not going back up in this bar. You're getting short at 08, 08 and a half, 09. And over the next 30 minutes, it trades all the way down below the figure, 115, right? I mean, and, it's more or less going sideways in here, but sort of trending down. Obviously, it did break lower down into the 20s, but, this is sort of the issue that you're going to run into trading 10 years. You get it. It's a grinding market sometimes, right? It's not, not every day you get those moves that you see that we hit after the CPI. Oftentimes it's just sort of like the slow grind down. But this was just so obvious. And again, if you use a longer time frame on a footprint, normally I use a 1 minute chart as well as a 5 minute chart. But you could look at, you could just put on another screen, put a 5 minute chart up of bonds, 10 years, E-minis, MES, contracts that trade a lot of volume, right? I mean, look at these volumes, right? It's normally trading in the thousands, but just one contract traded there. Just as it's dropping lower, you see 2 contracts, 1 contract, 7 contracts. At the top of these bars, there's just no more buying interest. There's just not, traders just aren't interested in taking it higher anymore. So, if I had to, if someone put said, Mike, what is the one trade that you're going to look for? I would look for, at the highs or the lows of the day, very minimal volume, right? 1 contract, 2 contracts, 3 contracts trading at the low or at the high, because that's telling me that, the last buyer has bought or the last seller has sold. Honestly, probably what this 1 contract is, people were trying, we're coming back up to the high, and it's probably, some guy, some trader, I'll say some guy, it could be a woman, testing it to see if they could, trade it to attract other buyers to come in, or, maybe trigger some stops or something, because it is the high of the day. But there's nobody else interested, right? It's like, anytime you're going up to a high or you're going to take out a high, sometimes the market is bid, like here it was bid earlier at the high, right? So it was bid and the offer was 1 tick above the high, but nobody bought that 1 to probe it. But as you're coming back, this 1 could have either been somebody, the last buyer buying, or maybe somebody trying to trade it to get, the computer systems to also start to trade it. But the fact is, nobody traded it, right? That's the important thing. It was just 1 person traded it. That was it. Couldn't go any higher. Market started reversing off that. That's your sign. Then you start adding in the next bar, 2 selling imbalances, right? Strong negative delta. Next bar, strong negative delta. Point of control is moving lower from the bar at the high. Second bar is lower. Third bar is lower. The next bar it's higher, but it's it's a green candle, but it tests that same point of control from 2 bars earlier. Then the sell-off continues. Selling imbalance, selling imbalance, selling imbalance. 2 lots. Right, we open up and there's just no more buying interest. Right, that's just what you often see. On moves down, is at the top of the bars, thin volume. And which sort of leads me into this next point is a lot of people think that order flow is about watching where the big volumes come in. Right, everyone uses that uses a dome or trades on a book map or a heat map rather. They're always looking for the areas of liquidity where there's big volumes. But when you have periods of very little volume or prices that trade very little volume, that's also very important. Don't disregard that. Don't think, only 2 contracts traded. That doesn't mean anything. No, it's very important on a market that's trading 20,700 contracts in this bar, and at the high, you only trade 1 contract. Okay, so if he said if I only had a basic footprint with no other tools on there other than just the bid ask volumes and point of control and imbalances, right, going back to 2012, 2013, 2014, before some more advances were made in the order flow chart. That's what I'd look for, and that's what I did look for, right? I mean, I remember taking trades like this in British pounds on 15-minute charts, right? It would spike up there, trade 1 contract, and then start to slowly drift down. It's just a sign of lack of buying interest at the high of the day. Okay, so again, just remember, it's not necessarily only about watching where heavy volume comes in. It's also about paying attention to areas of very, very light volume or next to no volume. I don't want to say no volume because then it wouldn't trade, but when you're seeing one contract, two contracts, three contracts go through, then that's something that you should also pay attention to and try to understand why it's happening. That's the whole point of using order flows, to try to understand what's happening in the market and trade accordingly. Because once you understand what's happening in the market, then it just makes sense. And it's one of these things where it's a double top, okay? And right, as soon as this bar closes, it's go time. I know a lot of people that will trade things like this double top, and then they'll have a level. Okay, well then we got to, it's sort of, it's that M shape. They got, well, wait till we break down this, 115.01. Well, this is your trade. As soon as this bar closes, that it's it. This is your high. It's most likely going to hold. And again, where do you place your stop? It's just above that high, because if buyers come back in and start to push it higher, you don't want to be in the trade anymore. So I mean, your stop would be up here at 12. You're getting short somewhere around 08. For what? At least a minimum move down to, this area here, this previous low around 01, 02, right? And potentially lower when you start seeing the big, strong negative deltas, right? The aggressive sellers, like this bar, very strong negative delta, 8,400. The bar traded only 20,000 contracts, and almost half the volume, 40% of the volume is negative delta. That's telling you that there's strong selling, and then you could let the trade run a little bit further. So again, I hope you like this video. There's no one trade, so I get a lot of comments. What's your best setup? This is one of my favorite setups. The only problem is it just doesn't happen as often as I would like it to happen. I wish it could happen every day, but honestly, it doesn't happen every day. But when I see it, it's something that it's like an automatic trade. Right, anytime I see one contract trade at the high of the day, or at the low of the day, that's a trade I'm willing to take. And again, if you don't know NinjaTrader, there's a free NinjaTrader indicator that's included on NinjaTrader. It's just this one, current day open high low. And that's how I know this is the high of the day. This green line, right? The high of the day is an important level. There's a reason why the market's got a high and a low, and when you're up there at the high or down near the low, you always want to be asking, is this going to be the high or is this going to be the low? And if you think it is, it's going to make for a great trade opportunity, because it's not uncommon for the market to go from the high of the day to the low of the day, or from the low of the day up to the high of the day. I mean, it doesn't always work out that way. Sometimes it just goes up 30% from the low, covering the day's range, but it has the potential to potentially traverse all the way to the other side. That's why I say, if you can have a reason, not trying to pick the high or the low, but if you have a reason to sell up near the high or buy near the low based on the order flow, go with it. So I hope you guys enjoyed this video. Be sure to like and subscribe to the channel, and keep posting your comments, keep them positive. And I'll see you guys on the next video. Bye-bye.